In this video, I'm going to give you guys a breakdown on the trade that I taken today on the pound dollar. Now, obviously, if you follow the ZCFX approach, it provides endless opportunities like this. So without further ado, let's jump into it. Now, first things first, as always with most of my trades, I try and send out high time frame areas of interest in which I'm looking to buy or sell from. And then obviously through the course as well, you'll learn how to enter those trades off the points of interest. So it's down to you to figure out how to enter. Anyway, sometimes I will obviously send out the 1 minute time frame as well, but as you can see on the screen, I had sent out the 15-minute point of interest in which I was looking to trade from, in which a couple of my students managed to catch. I'll pop one up on here on the screen just to show. Anyways, as you can see here on the H4 chart, price was pretty much trading in between both supply and demand. It wasn't given any clear directional bias. However, we did see a break to the upside here, forming this new range high and this new range low. Now, obviously, price had broken bullish, so ideally, I was expecting price to overall continue to long the market in terms of, price being bullish. I was looking to long, and obviously, I targeted down into this area of interest here because that was where I was looking to buy from. Now, as you can see here on the 4-hour time frame, anyways, we had this range high, and price was more so consolidating for quite a while there, but we kept wick rejecting and not closing above the highs, indicating that prices again wick rejecting to the upside. If you watch the rejections versus candle closures on the previous videos I've discussed, you will know exactly how this model works. And as you can see there, price is wick rejecting to the upside there, indicating that okay, price is failing to break above these highs, so we could actually be on to a potential pullback here, because again, remember this is a bullish range, so ideally I'm anticipating a pullback. So this is my area of interest to buy from, hence is where I was looking to try and target the trade. Now when you jump onto the 15-minute time frame, as you can see here, price had obviously, these are the wick rejections that you just seen on the H4 there, but price had shifted bearish on the 15-minute time frame here and also sweeping out the Asia highs. Now we had this new range low, new range high. Price also generated more liquidity in the market for us to target through, and as you can see there, price had pulled back into our area of interest after a consolidating period there. So price pulled back into our area of interest, so all I had to do was jump into my entry time frame. As you can see here on the entry time frame, price had traded up into this point of interest, more so consolidated for a little while here before shifting bearish initially here. Now the reason why I didn't look to trade from this is because number one, I use candle confirmation anyways, and price did not react from this point of interest. And number two, the simple reason being that when you look at this shift here compared to this shift, it actually took out a bit better structure where it had previous imbalances. Okay, so I won't go into too much in that because that's some of the gems that you can get in my course, but there are certain rules that validate range highs and lows. Okay, and you probably already guessed it as well, some of you. Anyways, as you can see here, we've got another shift to the downside here. And if anything, we generated more liquidity as price was more so just creating these equal highs here. And as you can see here, price had mitigated into my supply zone. We wick rejected quite a few times, and then we engulfed to the downside, in which I looked to take entry after the engulfing had closed. As you can see, I had my stops pretty safe above the M15 highs there. And all I looked to do was target down into the H4 point of interest. Now again, it's fine if you target into these M1 lows with your stops here, or if you target into the M15 lows, which is what one of my students did. That's absolutely fine. Now I opted in for wider stops just because I feel guilty targeting bigger risk rewards, especially when I try and favor the smaller risk reward trades. Now even though this is just under an 8-hour trade, it was actually just under a 4-hour trade when you include commissions, and also the fact that I risked 0.5 rather than the whole 1%. And obviously when you extend it to behind this high, which is perfectly fine and reasonable, because a way I like to manage a trade is, for example, if price engulfed here and I entered here, then we had come back up and closed above this high, I would have closed the trade. Okay, but there, as you can see, just under 13R with the 1% risk, the opportunities and the potential is there. But like I said, I try and ideally favor the smaller risk rewards and returns, but once in a while, you will get these big hits and big returns. But to sum it all up, H4 wick sweep anticipating a pullback, 15-minute shift to the downside, M15 POI mitigation, M1 shift, M1 mitigation, my candle confirmation, and entry. And then from there, price had mitigated this S chain, and then just continued bearish. So if you want to learn how to catch trades exactly like this is also pre-New York as well, just to throw that in there. And obviously during New York you can sometimes expect a little reversal or a continuation. But anyways, I won't talk about sessions characteristics just yet. That'll potentially be for another video. But like I said, if you are wanting to catch trades like this and understand how to catch trades like this and trade with confidence, then I highly suggest you check out my mentorship, as that is exactly what I teach. It's a 12-month roadmap and split into 4 different quarters throughout the year, and I'm essentially just showing you how to trade consistently profitable and have the ability to pass fund challenges. And the proof's in the pudding. I've had many students who have done that and conquered it and succeeded. So why not you? But anyway, guys, hope you enjoyed this breakdown. I took a lot of value from this video. Make sure you go ahead and study it and check it out yourself on the charts. But that was GU for our trade. Thanks, guys, for watching, and take care.